Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another market recap on Friday, November 5th. It's November. I'm, of course, joined by my wonderful co host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, here we are, another record-breaking week.
It's crazy, and it's November, and I don't know if you can tell right now, but this is all natural light. We have sunshine, which is something we don't get to see lots in November in Vancouver, so that's very exciting. There is so much that we're going to talk about this week, so I'm going to dive right into it. We're going to talk. There's a bunch happening in the markets. We're going to break down a bunch, give you a full market update. We're going to talk about small caps breaking out, which is always good for us here. We're going to talk about OPEC. They came out with an announcement, have ruffled a few feathers. And of course, we're going to get into some CSE issuer news. There's lots of CSE issuer news this week. So let's start off with a market update. We're going to start off with economic numbers. What happened?
Yeah, I mean, there's been a few different things that came out this week, and the numbers have been really strong. So obviously today, the non-farm payroll numbers came out. You know, there's always lots of sort of jockeying back and forth about what that could mean, but the number was bigger than expected, so that was positive news. And then earlier this week, we saw that both the ISM manufacturing and the ISM service numbers out, and they showed acceleration again. So, you know, if you sort of look at what we feel has been the case here, we saw, you know, Delta COVID ramp up. You know, in the summer, we started to see the economy slow down a little bit. You know, those cases have started to drop. It seems like people have, you know, got that under control in a lot of jurisdictions, or at least the numbers are declining, the cases are. And so now all of a sudden we're starting to see a pickup again in economic activity. So ISM up both from the manufacturing side and then from the services side. And then the job numbers are up this week. So, you know, obviously from an economic standpoint, things are fairly strong.
This is great news. Okay, what happened with Federal Reserve?
Yeah, I mean, the Federal Reserve, they had their meeting. They hosted their meeting on Wednesday, and you know, it wasn't a lot of surprises. You know, they've really done a good job of leading the market so that there's no surprises, and they've decided that they're going to start with the taper. 15 billion a month is coming off of that, so you know they'll continue to taper down. They didn't do anything with interest rates yet. We think that that's probably into 2022. I know they've talked about the fact that they thought that, you know, a year from now they would have interest rates, you know, on the path back upwards, but that'll obviously depend a lot on the economy and you know where things are at.
Well, it's going to happen at some point, right?
You would you would think so, yeah. I mean, the law of nature will take them back up, especially if we continue to see the inflation where we've seen it.
Well, a word I haven't heard in a while, but that we're living in is unprecedented times. So who knows when
Mm-hmm.
that's going to happen. We're going to talk about OFSI, which allowed banks to resume buybacks. So just to remind everyone, OFSI is the Office of the Superintendent of Financial Institutions. It is Canada's banking regulator. And they have cleared the way for banks and insurers to raise dividends and resume share buybacks, as well as, I think, maybe some executive bonuses, I think, are allowed on the rise as well. Okay, so tell us what happened there.
Yeah, you know, if you go back to COVID, they sort of put the brakes on the banks being able to buy back shares and raise dividends, and the banks have been performing, you know, tremendously well through all of this. Obviously, you know, in Canada, they're really are a monopoly, and so, you know, their numbers continue to rise. The capital market side of their businesses have been doing phenomenally well. Obviously, we see, you know, markets at record highs. We see, you know, record financings being done, and so, you know, their businesses have done well. The stocks have all recovered to past where they were, you know, pre-COVID, and now this opens up them for the ability to buy back their shares, which of course, you know, causes some support for the shares in the market, which, you know, just further supports things. And then dividend increases. Obviously, if you're a shareholder, you love to see dividend increases. It just means more money in your pocket each month.
So I read somewhere that we'll probably see dividend increases happen pretty quickly. With the fourth quarter coming, it might be implemented fairly quickly, which is always a good thing. So if you own, you know, a bank stock, you typically get paid back. If you own a preferred share, you get paid back in these dividends. Do you think this will do well for those shares?
Yeah, I mean, it's certainly not going to hurt for sure. Right now, you know, the financials are one of the strongest sectors. We rank all the sectors within StoneCastle, and the financials are in the top 3 sectors in Canada, and they have been for certainly the better part of this year for sure. And you've seen that with stock performance. It's I think the second or third best performing sector on the market right now in Toronto.
Very cool. And Canadian banks have historically been, pretty sound financial institutions globally.
Yeah, they have. I mean, they've got a solid record of dividend payments. There hasn't, they continue to increase them, and they obviously have their ups and downs with the overall markets. But the banks and the level of profitability that they have, continues to increase from a dollar perspective all the time.
Great for the executives as well. Okay, let's talk about the S&P 500 and NASDAQ. They yet again hit another all-time high. Tell us what happened.
Yeah, I mean, it's as I'm looking right now, both markets are still up on the day here. So it looks like it'll be the 64th new high for the S&P this year, and the 41st new high for the NASDAQ this year. And interestingly enough, the S&P's closed positive all 5 days this week. So quite a streak. Obviously, investors are quite enthusiastic. It does mean that sentiment's been pushed a little bit, to the far side of extreme. We look at a number of different sentiment numbers that, sort of run from 0 to 100. If you go back to COVID, March of 2020, we saw some of those sentiment numbers in the, low single digits. So like 5-6%. And now they're up, sort of 93-94%. So it's showing you that, investors have swung from one side to the other. When that happens, we're never too surprised if there's a bit of a pullback. It just means that euphoria is there, and what that does is it lets a little bit of air out of the bubble when, the market pulls back. And it just seems like everybody who's got money to go into the market has their money in the market, and then of course, the market pulls back and sort of, puts people on guard, and they sort of think twice about being reckless with their money again, and allows the cycle and the markets to continue higher.
Very cool. Yeah, it'll be interesting to see what happens now. Everyone's excited, but that does turn at some point. Okay, let's talk about asset leadership model. What is it? What's happening?
Yeah, so at StoneCastle, we run an asset leadership model, which is one of the proprietary tools that we use to help us manage overall portfolios. And what we do is we rank different asset classes. So we look at equities, both foreign and domestic. And then we look at fixed income, cash, and commodities. And so we want to know, where the strongest relative strength is at any given time. Typically, the markets are not doing well if cash and fixed income are in the top 2 spots, and they're not right now. So what we see is commodities and domestic equities continue to be at the top of the list. And of course, that bodes well for markets. This is not something that moves quickly. So, it's not like one day we see, one asset class leading and the next day we see a different asset class leading. This is long, slow movement. So, throughout the year, domestic equities, foreign equities, and commodities have continued to stay at the top of the list. And really that's, been the case since probably June of 2020. So it's great to see that that's still the case, especially for the equity markets. If you're a fixed income investor, probably it makes things a little bit more challenging, but that's, kind of where things sit right now. So we're just looking at it as certainly positive for the market.
And so to tie in everything that you just said, typically equities are in favor when interest rates are low, because you don't make as much money on investing in debt, right? So when we start to see those interest rates rise, you might see a shift going from equity to debt. Is that right?
Yeah, I mean, obviously it's, if you have money to invest, you're always looking for the highest rate of return. And where is that? And where is the potential for that to be? Well, if you're looking at a pure fixed income type of return where you're getting paid interest, well, then as that interest rises, you probably have less propensity to want to take risks in the stock market. You have more ability and more probably desire to invest in fixed income. Right now, those rates are fairly low. So, that's not that strong a competition, but as rates start to increase, that could be competition for the equity markets and, cause certainly certain sectors, but maybe the overall market to, for people to reevaluate where they're invested. And then, obviously tying in the economic numbers. As the economic numbers are strong, that's positive as well.
Super interesting. I always learn so much from you, Bruce. I hope our viewers get the same. Okay, let's talk about small caps. They're breaking out.
Yeah, so we've sort of talked about this a lot during the year, where if you go back to June, July, the breadth of the market was very narrow. It was only really the top companies in the in each of the indexes. So the TSX 60, the S&P probably 100 that were leading the way. And now what we've seen better breadth. So we're just seeing more companies participate and more smaller and mid-cap companies that are now starting to break out, both from a moving average perspective, from a new high perspective. And this is positive because you just can't have a market that is led by only a few stocks, because once those few stocks give up, then the market typically goes down, and that is narrowing breadth. Right now you're seeing broader breadth, and so you're seeing investors come in and look at kind of all capitalizations within the market. So that's a much healthier position for the market to be in.
Awesome. I love it. Okay, we're going to talk about OPEC. So just to remind those out there, OPEC is an organization of the petroleum exporting countries. So they came out this week and announced that they will stick to their slow pace of oil production at 400,000 barrels a day. So just to remind people, because we've talked about this a few times, this is an organization of countries, and they decide how much oil gets produced and released. Now, if they continue this slow release of oil to be produced, it increases oil prices, as we've been seeing these incredible oil prices. This is ruffling some feathers, obviously, with certain people, because with increased oil prices, it increases our cost of living dramatically. It comes down to us at a micro level. So explain to us what happened and what this is going to do.
Yeah, OPEC obviously agreed to this this production increase, and it's been kept in line. And so what that means is we're now, from a oil supply and demand perspective, we're almost back to where we were pre-COVID, which is interesting that the world is using as much oil now as it was pre-COVID, because airline traffic is not nearly as strong. I think it's still probably less than 50% of where it was. And so if and when that starts to pick up, over the next, say, 12 to 24 months, then you could see a huge increase in demand for oil. And at the same time, if OPEC isn't pumping anymore, then obviously it pushes the price up. It's just pure supply and demand. And so, there's obviously some countries that aren't tied directly to oil that are unhappy with this, because it does affect the cost of living for everyone.
Well, it's interesting. It's hard to wrap your head around that we're consuming the same amount of energy, and obviously makes you think about where energy is getting consumed. It's maybe done a shift, but we're still consuming the same amount. Okay, let's get into some CSE issuer news. My favorite part of the show. There was so much going on this week. I'm going to tell you a bunch of stuff that happened, but there's one question I want to ask you at the end. We had a bunch of new listings this week that are pretty exciting. The Good Flower Company, welcome to the CSE. They have delisted from the TSX Venture Exchange, and they are joining our family. We're excited to have you. This is just another company that we're seeing in kind of this health and wellness environment that we're starting to see to come to the capital markets. They are focused on investing in flour-based products that are gluten-free, plant-based, and gluten-free. And actually, I read up a little bit on them. They have some Michelin star chefs that are helping them produce these. It's a pretty neat company. So welcome to them. Welcome Coin Analyst Corp. They listed with us this week. Pedro Resources, welcome, and Illyrio Gold Corp. I'm seeing lots of stuff in the mining space, which is pretty neat to see. So lots of new companies that come every week. We just had our CEO in Vancouver this week. It was great to spend some time with him and can reconnect with people in Vancouver. And I believe that, from what I heard, the numbers that are coming to the CSE, it's just the best year that we've ever had. So super excited to have all of these people come and join us and, continue to build out these amazing markets. There was also some neat capital raises. We're starting to see some big numbers again in the capital raises. One is a mining company. Freeman Gold Corp announced that they will be completing a $10 million private placement to commence an aggressive drill program on their Lemhi project. So congratulations to them. I always love seeing exploration companies have the ability to raise this kind of capital, because it really drill programs, especially big ones, are incredibly capital intensive. And the only way that they can really fund those is going out to market to raise the capital. When markets aren't conducive to this, it's very difficult to forward your property. So excited for them, looking forward to see what results they get from that drill program. And as well, there was the completion of a private placement for XS Financial. They completed a $43.5 million private placement. And I wanted to talk about this one. So XS Financial is a company based out of the US, and they lease large scale equipment needed to grow cannabis. And a lot of their clients are the big MSOs in the States. They're a big company. And it's a bricks and mortar to the cannabis space. And it's kind of neat to see these bricks and mortars really have a light and day as well, because those are the guys really kind of providing the backbone to the growers. Now they raised $43.5 million as an unsecured convertible note. Can you explain to us what that is?
Yeah, so unsecured talks to what the security of the debenture holder is. So a secured note is typically tied to some type of asset. So maybe they had real estate or equipment that they would tie it to. In this case, there's no security. So historically, they've had if you have unsecured, you typically have a higher interest rate. In this case, I believe there's warrants attached to the financing as well. So they probably had to provide that as a sweetener because of the fact that it was unsecured.
And typically, I mean, unsecured, it doesn't have that same asset that's backing it. But in a company where their business operation is to lease out equipment, you do see that there's probably some assets there, should things go awry. But this is also kind of nice for companies to be able to do this, right? Because this is less dilutive for shareholders. Is that right?
That's right. I mean, if you're a shareholder and they don't have to issue equity, they can borrow money and presumably be able to pay it back at some point in time down the road. Then they effectively only have to pay the interest right now.
Absolutely. And so if you're a shareholder and they increase their business and their production and their revenues, at the end of the day, this will work out well for you, and they don't have to raise equity and issue more shares. So congratulations to them. They're quite a neat company. I just was learning about them this week. Bruce, what should we think about going into next week?
Well, obviously with the fact that, the market's had 5 days in a row in the US positive and is, on the 64th new high of the year, sentiments stretched to the high 90s. Don't be surprised if you saw a bit of a pullback. We have some cash in our portfolio, and we'll be selectively using that to go back into the market. But that's what we're kind of watching for next week.
Very cool. Well, listen, have a wonderful weekend. And Bruce, the whole CSE sales team will be coming to Kelowna, so I really look forward to seeing you in person.
Yeah, that's on Tuesday.
We'll be in 3D, Bruce.
That's right, yeah.
We'll be in the metaverse.
That's right. Without our goggles on.
Without our goggles, exactly. Well, listen, I hope you have a wonderful weekend. I look forward to seeing you next week.
Thanks, you too.